EV brands can't afford to lose Porsche, just like the West can't lose Jerusalem. Because without Porsche, many EV brands wouldn't know how to design their cars. But Porsche itself has been feeling a bit down lately. According to Porsche's 2025 financial report, its full-year operating profit fell from 5.637 down to 413 million euros, plunging 92.7%. Revenue was 36.272 billion down 9.5% year-over-year. Porsche must be thinking, good grief, the copycats are selling like hotcakes, while I'm the one struggling as a joke. What's up, guys? Welcome to Sailing Let's see if Porsche is really doomed. Actually, if you look closely at this financial report, you'll find this massive profit drop isn't a total collapse of daily operations, but a typical one-time massive write-off. What does that mean? Over the past few years, hasn't Porsche been following the trend by heavily investing in EVs? But as they went along, they realized their EVs weren't selling well. They needed to adjust their pace. So, product strategy and company restructuring costs ate up about 2.4 billion euros. Battery-related business needed adjusting costing another 700 million. Western powers wielded the tariff club, which dealt a heavy blow to luxury brands like Porsche, causing another 700 million euros Add loss. All these and round it off, you get nearly 3.9 billion in losses. No wonder their profit was slashed to the ankles. Of course, besides these one-time expenses, Porsche's declining sales are also a fact. In 2025, Porsche delivered 279,449 down 10% year-over-year in its home market of Germany. They delivered 29,968 units, a 16% sales decline. In the rest of Europe outside Germany, they delivered 66,340 down 13%. North America was a bit better. Despite the tariff impact, sales held steady at 86,229 units, a 0% change. But in China, once Porsche's largest single market, sales plummeted by 26% last year, with only 41,938 units delivered. For comparison, 2021 was Porsche's peak in China, selling 95,700 units. 4 years later, sales have been cut by more than half. With such a huge drop, Porsche dealerships have also shrunk. By the end of 2025, Porsche's 150 stores fell to 120. By the end of 2026, stores are expected to drop to around 80. The reasons for Porsche's fall are multifaceted. The rise of Chinese brands goes without saying, let alone Porsche. All foreign brands have taken a massive hit. We won't expand on this area of effect damage. The EV transition is Porsche's other big issue. As early as 2019, Porsche launched the Taycan electric sports car. In terms of performance and quality, it won a lot of praise. It even won the 2020 World Luxury Car and World Performance Car double awards. Back then, domestic EV brands were in their infancy. Porsche's EV layout was actually quite early. They also set ambitious goals, over half of models to be pure EVs by 2025 and 80% to be pure EVs by 2030. But reality's script didn't sync up with Porsche's. In the Chinese market, because Chinese brands advanced rapidly in electrification, Porsche's EV products lacked competitiveness. Outdated infotainment led to poor sales in China. In the European market, Taycan sales were decent, but because Europe's overall EV progress has been somewhat slow, user acceptance of electric cars remains limited. This failed to force the market to produce excellent EV products and infrastructure. Take Porsche's self-developed batteries. Back in 2021, Porsche gathered people to form a joint venture for self-developed car batteries. The initial position was high-performance batteries for sports cars, but Porsche figured, since we're doing it, why not make mass-market batteries for more models? So they increased investment and expanded factory capacity. But this idea ran into problems. Porsche's batteries from the very start used high-performance solutions. Poor affordability led to very high costs, making them unsuitable for mass production. As we mentioned earlier, Europe's EV transition fell short of expectations. With relatively weak related supply chains, this led to a low yield rate for Porsche's cars, constantly delaying scalable mass production. By 2025, forced by reality, Porsche finally announced on its self-developed battery mass production to the small-scale, high-performance route. Massive investments went down the drain. Besides wavering on battery tech for the Macan's generational planning, Porsche also made a mistake. Also around 2019, Porsche decided the second-gen Macan would be EV. The first-gen gas version would sell until 2026. Then transition to pure electric. The reason was the Macan platform was old and costly to upgrade. Better to focus resources on the EV version. Porsche also believed that with its brand power, the electric wouldn't struggle to sell. Plus, in those years, the EU kept saying it would fully ban gas cars by 2035. This fooled a whole bunch of European automakers, who ramped up EV investments, focusing only on the electric EVs. Macan seemed politically correct then. But later, the EU backtracked. In late 2025, they decided to withdraw the gas car ban, switching to an alternative plan. As for this, we covered it in previous Sale episodes. You can click to watch it there. We won't expand on it here. As a result, the gas Macan saw no major updates. Minor tweaks for 3 years left it with no highlights, resulting in slightly falling and global a huge plunge in China. In 2023, The gas Macan sold 17,577 units in China. It sold 9,627 units. It sold just 5,319 units. That's a 70% drop over 3 years. And the electric Macan, it sold only 1,313 units in China, completely unable to carry the sales banner. So earlier this year, Oliver Blume, Porsche's CEO of nearly 10 years, publicly admitted that stopping the first-gen gas Macan was a major mistake. You could say it hurts deeply. Sele understands this pain too, because our book sales are also heartbreaking. To keep bringing you great content, please support our comic book series. We always use beautiful printing and humorous art to explain classics and popularize science. You gain knowledge while laughing and find joy, whether for yourself or as a gift for kids. It's an excellent choice. Click the yellow cart below to buy. Thanks for your support. So, what can Porsche's new CEO turn the tide? According to Porsche's official 2035 strategy frame, they raised the slogan, quality over quantity, meaning, don't talk to Porsche about price wars. Chasing sales and volume is too low end. Porsche will focus on top-tier sports performance, driving pleasure, and brand premium. As for specific measures, Porsche will abandon the goal of 80% pure EVs by 2030. Gas, electric, and hybrids will coexist no longer betting solely on pure EVs. Also, as mentioned earlier, cutting down dealerships is a key move to directly reduce costs and focus on core cities. Porsche will also launch global layoffs and streamline management to improve corporate efficiency. Plus, Porsche is considering merging Panamera and into a single model line to reduce R&D and production complexity. This likely means dropping the Taycan name. Panamera will simultaneously offer gas, plug-in hybrid, and pure electric versions. Taycan will enter the museum as a memory. Regarding new cars, Porsche plans a larger SUV than the Cayenne. It's expected to have 3 rows of seats, similar to the Mercedes Golf and BMW X7. In the past, such a mega Cayenne would be snatched up by the rich. But with today's fierce auto market competition, a mega Cayenne isn't guaranteed to win. But there's also some exciting news. That is, Porsche plans to launch a sports car positioned higher than the successor to the 918 Spyder. Almost 13 years ago, the Porsche 918, McLaren P1, and Ferrari LaFerrari debuted around the same time as 3 performance beasts, pushing nearly 1,000 horsepower. The Holy Trinity. They started a new era for hybrid hypercars and became spiritual totems for their brands. If you remember these 3 legendary cars, drop a 1 in the comments. Let's see if they were your youth too. However, since the 918, Porsche has delivered a futuristic hypercar like that in a long time. If a true successor really emerges, it'll be a massive event for the car world. But from a financial return perspective, Porsche probably still hopes the Mega Cayenne brings them the most success. Looking at Porsche's future in the short term, as one-time write-offs fade and cost-cutting via layoffs takes effect, performance will likely bottom out back to a normal profit range. After all, Porsche's brand heritage and loyalty to core models like the 911 it hasn't lost its ultra-luxury market fundamentals. But long-term, challenges still outweigh opportunities. Technical shortcomings in the EV transition, the shrinking Chinese market, and escalating global trade barriers are hurdles that can't be dodged. This profit plunge is a crisis, but also an opportunity to pivot. Can they seize the chance to break through? Otherwise, more copycats will surpass the original, and the former luxury myth will just become a market memory. Alright, that's it for this episode. If you found it valuable, please follow, share, and subscribe. I'll share more automotive insights later, helping you become the car guru among your friends.